So I've been looking for this trade setup to play out for a couple of days now. This is the US dollar basket on the 4-hour time frame. 4-hour time frames are really good time frame for busy people that want to trade intraday during the day, but are working or got other priorities. 4-hour time frame, you can get some good trades out of a 4-hour time frame. Especially the setups could certainly be setting up in the morning time, and you can get some nice moves in that European morning session. But anyway, let's take a little look at this US dollar, because it's been on this 4-hour chart. There's no doubt we've got our pro trading system on, we've got our storyteller indicator, these yellow lines measuring divergence. We're making lower highs. Red is for selling, green is for buying. It's not a market that I would trade the US dollar, because I would do the opposite. I would basically, if the US dollar was going higher, US dollar basket was going higher, I'd be shorting the euro dollar. And that's exactly what I was doing this morning. I'll show you why in a second, but you can see this trend to the downside. And the storyteller, if I just do a bit of a line there and a line there, those yellow arrows pointing down, where if you look at the storyteller here, these histograms on the storyteller are actually sort of going up with momentum. So at some point here we're going to get green PTS, and that's what we got. We got that green PTS. In fact, these are the profit targets and stop loss. In fact, what I'm going to do, I'm just going to turn off the targets here to make it a little bit cleaner for you to see. There you go, taking away the profit targets. Of course you would use the profit targets, but it wasn't the dollar I was going long. I was looking at euro dollar. In fact, it was the pound versus the US dollar. And you can see here, so in my head I'm thinking dollar divergence long, pound US dollar or euro US dollar short. Now, why didn't I take the euro against the US dollar? Well, because we had a signal first in the pound, sterling versus the US dollar first. So let me just show you that to the 1-hour time frame. So I call it the anchor chart. It's been called all sorts of things over the years. Anchor chart, base chart. What it's saying to you is that's the bigger time frame, that's the structure of the trend, and now it's down to the smaller time frame for precision entries. So if we think the dollar's going higher, we've got the pound US dollar going low. So I'm looking for sell signals this Thursday morning. Okay, so we got a sell signal right here. Unfortunately, I'm in bed. Okay, 3 a.m. to 3 a.m. in the morning. This nice little sell, so we're already down here on the pound, and then this little blue candlestick is telling me to get ready for the next sell signal. It's the 1-hour time frame. Now, you've also got momentum pointing down on the storyteller here as well. So it's down, guys. It's short side trade, okay, and get a big sell off here, which is nice. Now, mentoring students is when we're mentoring students, it's quite an interesting topic when it comes to entering trades, because the easiest trade to take is some sort of break above the high or low of a candlestick. So let's say we get the blue candlestick, we put an order underneath the next low candlestick right there. So what that really gives us, it's like a breakdown or a breakout trade. You get the move down, red PTS, red storyteller. Remember, we're looking for shorts. Then we get the rally higher, and then it confirmed and breaks the low of the range of the last candlestick, and then just literally sells off here. And this is a live chart, guys. This is going on in real time here. Now, that's fine. That's perfectly fine. You'd put a stop order probably just above the swing highs here, because that breakdown is good, and then you don't really want it to retrace and go above that pivot high, because that's there where the structure of the trend is really going to break down if we make a higher high sort of thing here and we start doing this. All right, so putting the stop above the pivot high, we call that a pivot high like that, which is above that swing high. Now that's an easy place for a good. I put my orders there as well, but what I like to do is also, and a bit more advanced setup or a bit more advanced entry is as it's going up into the moving averages, then we short in here. Okay, as it's going up, we short, and then once you get into profit, then you put your stop loss order in here. But you're looking at risking what, 15 points on the trade or something like that. So there's a couple of ways of entering that setup. You can use the ProTrend system entry requirements as well, which I've just turned off for you. All right, so I mean, I like to do both ways, especially if I'm going out for lunch. I can put an order in there and then get it triggered with me not being at my screens. Okay, so which is really nice indeed. So this is playing out really nicely. Now, as I said, there are some profit targets, and I've just turned on the couple of them here, 11,941. But if you didn't have the system, I would be certainly looking at this support area here. Now, you tell me, this prior low here, what's going on? Why is this significant, this area here? Not only is it a support area, and it's a fresh touch of support, but it's also, if you look to the right, is 119, which is a round number. Okay, you see a lot of the time, like it did here, it bounced off round numbers. Round numbers 119, 120, 121. Often bounces off 121.50, 122.50 as well, but not as solid as those bigger round numbers. All right. So a nice red PTS sell signal today. Now you can even go down further to a 5-minute chart. Here was a trade from this morning I did. This was an earlier morning trade. Okay, then we go into, this is the European session here. A lot of volume comes in. And around, I would say, it's difficult to pinpoint exactly. I've been doing this for 20 odd years. It's difficult to pinpoint exactly when the doldrums come into play in the European session. So that, what I'm saying by doldrums, I'm talking like 9:30 to about 12:30. You can see the doldrums here where the market goes pretty sideways. And then around the 1 o'clock time, you get that US market sort of opening up on the pre-market trading in the equities. And I'm trading currency here, but everything just has a knock-on effect. The dollar higher, and other commodities pushing up or down. We'll have a look at gold in a second with this dollar strength, because there's a good old-fashioned saying that dollar higher, gold lower, gold higher, dollar lower. It's not always the case, guys. We see them often moving together, and we often see them going with each other in the opposite direction. So I would just trade the chart. Those correlations don't always work out, especially if you are a very short-term trader like myself, as in the day trader. All right, so a nice move down on the 5-minute chart. All you have to do is just take this nice sell signal. I was looking at the Aussie dollar as well. This was a nice trade, Aussie dollar. Now let's go back up to our anchor chart. All right, so we're going to jump back up to the 4-hour time frame. Here's the 4-hour time frame here, and a little tip I would do, and this is for me personally. I don't know whether it's going to work for you, but if I look at this, and I often see it with our students when they get their new charts up and their new systems and indicators. As you're looking at this video, you can see if I go and scale it a little bit like that. Now, if you look at that chart, I can't see any trend. I can't see what's going on. I can see the PTS, I can see all my indicators, and obviously you've got your own indicators. You want to make sure they're nicely scaled on the chart. So what I like to do, because I like to trade our storyteller, I like to trade reversals. Okay, this thing about always trading with the trend. I'm sure there's a huge debate about that, and I think it's a load of bollocks, to be honest. Because when you're trading the currency market, there are so many opportunities trading reversals, tops, bottoms, trends. Why, what is, you look at the Aussie dollar here, you're looking at, this is a nice, I just trade momentum. That's what I trade. And I don't listen to people saying to me, you've got to trade with the trend. Yeah, but trends come to an end. And I'll show you the pound Japanese yen yesterday, which we took over 100 pips out of the trade, okay? But you look at the Aussie dollar here, this was nice. And I can scale it up now, and I can even crunch it up even more, because what I want to do here, if I crunch my charts up, you can hardly see the histograms on the screen here, but what I can see is what a lot of people don't do. They focus just on this area or what's happening right now. I want to focus on momentum down below. Sit back on your chair and just see what's going on down below on your momentum. So for example, if the price pushed up here, which it did, look at that storyteller. That's really high. And I've done this on other videos, guys. I would never be a buyer up here. I'd be a short seller. I'd be looking left, areas of resistance. I'd be shorting it back in from there's a round number there, I bet. Yep, 68. Back in from that round number, back into those moving averages. Divergence here on the storyteller. Okay, another divergence here brings it down. These are like 100-point moves. So I'm looking for momentum in the markets. Not always looking for reversals, because like yesterday, remember I've got to go back to that pound yen, but yesterday it was all about long side trades. Let me show you what I mean. Here is the DAX yesterday. Okay, just turned off the target so you can see. So yesterday it was long side trades. We fired green down below, we fired green PTS. This is pointing up. I want to be going long. I don't want to be going short. Okay, so I want to be going short here. I want to be going long here. Longs, shorts, shorts. This was a big long. This was a big move. This was an incredibly strong market move. 400 points in the German DAX. Our structure, our big anchor chart, the 4-hour, gave us the momentum. And then what we do, we go down to the smaller time frames. You can use a 5 or a 15-minute chart. Look for those buy signals, greens, because the structure. Now, I'm actually into this resistance area here. Okay, so if I look left, there's resistance. If I look down, I'm high-ish. I'm not too high, not as high as I was here on the storyteller, which brought it down for 8 hours. But I'm actually quite high. I want to be starting the move. For me to go with the momentum to start with up, I want to be on the first signals here and green PTS. When it gets high, and it's not too high, because we could go a little bit higher, I want to be looking for reversals back into the moving averages. Gives you enough trades. Should you trade with the trend? Well, do you know what the trend is? I mean, how do you define a trend? Let's look at something yesterday where you could argue that I went against the trend. Well, not just me, our students in our live trading room. Nice sell signal here. That's a short because it's red. It drops below green, red PTS. Short here, drops below red PTS. And I know I'm not showing you the trades I actually did, guys. This is just purely education structure, okay? And then another red here, red PTS down. Now, once we break this support and we break down below there, I'm still looking down. Now, I look down, and that is divergence. We call it a two-wave. Now, I've been trading two waves for many, many years. And some people don't like two waves, but there's a certain way of trading two waves. You've got to be really careful. But when you see an angle like that, which is a steep angle, maybe 45 degrees, it is a, I'm not going to say printing money strategy, but it is incredibly profitable trading strategy. Because the discrepancy between the price and momentum is huge. So we're looking for long side trades. We get the green PTS, the storyteller turns up and turns green. We're trading it back into those moving averages. Okay, we're still green now. I'm certainly out the trade from yesterday. And these were the sort of trades that I did on the challenge account last year from 10 to 104,000. It's just looking at momentum and trading and seeing where is the price action. And you could be in these trades for 2 days, some of them. And then you could be called a sort of a short-term trader. All right, so that was the end of the trend. And understanding the end of a trend often comes with divergence. 1, 2, 3, 4, 5, two-wave long. Storyteller. Now this comes up in our screener. This will come up in our screener. There was one here. Now if you're trading a divergence and it's flat like this, I don't like those ones. Those ones are not good. I want to see angled ones like this, so the histogram is much higher for longs than the previous pivot low. Okay, so really nice sort of trading action. Let's show you now something that's really crap and rubbish, and show you what we're looking at here. Dow Jones Industrial Average, right? The Wall Street market, if you're using a spread betting account. Right, now look at this. Now, momentum up, green buy, red exit. Momentum up, green buy, red exit. Momentum up, green buys, green buys. Green. This is over the Christmas period, green buys. Oh, 45 degrees. Oh, that's coming down. Wait for the red. There you go. And that's not a great angled one. That's a decent angled one. Great, that's going to push it back up. This isn't a great one, but it pushed it up really nicely for several hundred points, like 500 odd points, guys. Wouldn't take that one. I wouldn't take this one either, because that's too flat. But look at the Dow Jones. If you're somebody trading the Dow, I would just stand aside at the moment. The Dow's in a triangle pattern. Triangle patterns are breakout patterns, normally continuation patterns in a trend. Normally you find them in an Elliott wave, fourth wave, in a triangle. All right, so I don't know whether this is a fourth wave. I don't particularly care whether it's a Elliott wave, fourth wave. I do like to understand trend structure, 1, 2, 3, 4, 5 up, and divergences to end the fifth wave. That's fine. But I want to show you, this is one market that's a mess, and I would really avoid it. It's in a triangle. All right, now the white on the candlesticks is just our indicator saying stay away, it's really choppy, wait for the next color change. But I know, guys, that this, and we'll do another video on trading triangles, because they can suck people in and you can get on the wrong side of those moves, but they're incredibly powerful if you know how to trade a triangle. I'll remind myself to do that for you at some point. But a triangle, you know what you're doing, you're just looking at, you know, first things first, let's just think about, why would I start to think of this as a triangle? Well, first things first, it comes with chop. Maybe a stop out trade, the markets don't get going, and you're thinking to yourself, yeah, oh, this market's not moving. Straight away, psychologically, you get frustrated because you're getting stopped out, or you're in profits, small profits, and it's just not running. And you're thinking to yourself, well, hang on a minute, what's going on here? And then you sit back on your nice office chair, and just look at it and go, right, okay, it's rubbish chart, it's not got any direction. Away you can see no directions when the moving averages go sideways as well. And then just start to draw. You know, start to draw a trend. 2 reference points. Okay, so now it looks like I've got a triangle formation. Maybe I can take it from an internal trend line from here. Okay, so I just go inside this area here, but I've still got 2 reference points. And then I look at that, let's delete that one. And I look at that and I think, right, this is going to make me money very soon. Why? Because it's at the apex, it's going to break either side of this. As it contracts here, we're going to get a breakout. And we're going to get a breakout either red down. So if it fires red, I'll be shorting. If it fires green, I'll be buying. And if it breaks down and then comes back inside the triangle, then it goes the other way, then I'll flip it and go the other side. All right. So we are going to have a big trading move soon. So if the dollar is going higher, US dollar's been going higher, stock markets have sold off. So is this telling us that with the dollar higher now today, being Thursday, are we going to start to get the stock market going lower? We shall see. Now, if we look at the FTSE and the DAX, as I said, the DAX is up. FTSE, where are you? FTSE. Let's go find FTSE. FTSE. There you go. FTSE 100. Up. Up. Momentum yesterday up. Another momentum move up today. But look, if you look at the US markets, so I've looked at the Dow. Let's look at the Nasdaq. Red and down. Where the European markets are all the way up here, the US markets are all the way down here. Now what's going to be interesting for me is, and for you as well, of course, because you're a trader, if we start to see the US markets and the Dow break down, I'm going to look for sell signals in the FTSE and the DAX, because what will tend to happen is that we will see a catch up. All right, so if the US markets are way down here, the Dow, the DAX, the FTSE are going to start to catch up and roll over as well. And I think if I get a red PTS, I'll short it and I'll put my stop just where it sells me to, just above the highs. I think it's a massive risk reward. But I need a signal first, guys. I need a signal. So either Europe's wrong or the US is wrong. Either the US is going to catch up with the European markets or not. And I'm not a fundamental trader. I don't look at economics. I'm not looking at the economy. Okay, I do it outside of other areas in my life. But as a trader, I'm looking at a chart. I'm looking at a chart to see where there's a setup. And these are bigger term outlooks, okay? Let's see which market really does want to play the game for this next leg post holiday period at Christmas time. You see the S&P 500 that's trying to want to go as well. All right, so we're getting potential move, and once we start to see more red on the board, I'll be shorting these markets. And looking at that chart there, that's quite interesting. I'm not an S&P trader. I prefer to trade the Dow, but if I look at that, if I draw a trend line there, that's a trend line there. Delete this trend line. Keep your charts nice and clean, guys. Make sure they're nice and scaled as well, so you can see. Don't have your charts like that, unless you like having the charts like that. Have them nice and scaled so you can see the bigger picture, see the waves in your momentum indicator. And I would say, this has potential to break through here. And then what will happen likely is that, if that is a true move, this will act as resistance, and that will move even further down. Okay, so that's interesting. Have a little look at gold while we're here, because a little pop higher in the dollar market has given us something to trade here in the gold as well. So gold was a good one as well. Now, if I look, sorry for flicking around, but let's have a little look at this. So scale it up, that we're nice and scaled so we can see the bigger picture and the momentum, the daily time frame. And you can see this nice momentum here daily. So nice green buy back in October, November. This three-wave divergence here was pretty good. That's a decent angle. Pushed it up, we went long, so we had a little 1, 2, 3, 4. This is called an ending diagonal, guys. It ends the move, and it's the way you do it is you're drawing a trend line going up underneath the price, and you sort of, it comes to a head at some point. You just try and let's just do that one again. Let's get that ending diagonal. There you go. Oh, that's an interesting. Let's just tidy that red one up purely for the video. Yeah. Well, what about from here? That's much better. A lot of technical analysis is what fits as well. What's the pattern? What's the best trend line? And that is an ending diagonal for me. What's interesting about ending diagonals is it ends the move. And often the top trend line here, and it squeezes into this peak or point, I should say. And what happens is, very much like the triangle strategy, is that it will bust through, and the candlestick will have a wick will just break through and it come back inside. So the wick will be quite long. That's a decent sized wick, and then it comes back inside. And what happens, and this is the characteristics of an ending diagonal, breaks above the top of the trend line, comes back inside, and completely collapses the other way and ends the move. You'll see them, and this I wouldn't say is an ending diagonal. Might be some sort of wedge pattern, but I wouldn't say that's an ending diagonal. It might well be. You could, and that tries to break through, didn't quite get through, and then it just sells off. I think that's what's going to happen here. We've got some divergences going on. The storyteller is not at the highs where price is. So watch for a red signal. We could really sell off here, but we haven't got a red sell signal. Let's have a look at our anchor. I'm getting some red sell signals here. All right, so some interesting times in the markets here, guys. Some nice momentum. So as I'm doing this video, we're sort of at the end of the intraday move. And how do I know that? It's because the storyteller's high. And that's when we're at the end of the move. Short term. The start of the move is here. Green PTS, green momentum. The histograms are small. So you want to be in within at least 2 or 3 histograms here. Okay, and then it goes up. And then this area here, that zone, and we obviously don't know where it's going to end, but this zone here comes in with the highs here. It's like that rubber band effect, you know, stretch that rubber band, it can only go so far, and then it snaps back in. And I feel like it's a good way to say that and show people that with the storyteller and the momentum indicator here. When those histograms get really high and stretched, the price reverses. Always. Okay, but where people go wrong is they just don't know, and we don't know when that time is it's going to reverse. I then go down to smaller time frames, using my core time frame here, down to a smaller time frame, look for red signals on the candlesticks. All right. Pretty good stuff. Crude oil yesterday was just incredible move, and it's continuing here today, and 4-hour time frame, and yeah, it just really was an incredible move with the strength we saw in the equities yesterday. Oil the other way, and you could, like, you know, the stuff that we do here, you just trade the colors. You could trade the colors, and then if you want to put your structure and understanding trends and things on top of that, that's great, it's good. But I would certainly say that is what, guys, what is that pattern there? What pattern would you say? What sort of chart pattern? It's well known, isn't it? It's double top. Okay, we have a high, a little break above the high. Look at the wick, a little bust through that breakout area, sucks everybody in for breakouts, and then completely reverses. So when you ever see, if you start to draw like this, put a line here. I'm not a breakout trader at all. I feel as though it is a horrendous trade setup. I don't, want to trade breakouts. I want to be, the risk reward for me is not great. I want to be in the moves here when the momentum and the green, and then sell at our PTS targets or at the breakout area. But what I would do here, if you ever see a wick like this around the breakout area, it's going to come back inside and go the other way. All right. So if you ever find that, look at the wick here, little breakout to the lows, the wick's quite long, boom, it pushes higher. Okay, little move here, little one here, fake out. I want to be short in here and here, not the breakout areas. So you can see, look, this is starting to get very low now. When it gets low, it reverses. So, very nice move. In fact, you can see here on the 1 hour, it's getting to the end of the move on oil, and you can see that we're getting this nice angled divergence. It has to play out, guys, as in, we need this 1 hour candlestick to sort of close. We've got 41 minutes for this one to close, and then we'll see where it goes. But that's a nice angled divergence. So that's on my watch list for a reversal at some point. Okay, don't blindly just buy it because there's divergence here. There's certain entry criterias. I think that's pretty much about it. Just looking at the watch list here. Natural gas is down. Mess on the Euro New Zealand. Let's have a little look at the 4 hour time frame here. New Zealand CAD momentum certainly pushed down here. Look, double top breakout, fake above the highs. Candlestick sucks everybody in. The buyers that buy the breakout. Now they're getting stopped out and it starts to move lower. Nice order to short, pushing down to the downside, which is very nice indeed. A market that I've been trading a lot more, well, in 2022 was the CAD Swissy, and it's just some old technical analysis and targets here. Let's just delete all that stuff. It's been a great market to trade. Momentum's been down. You know, we've had momentum trigger down, momentum shorts. Only looking for short side trades. That's not great, but that puts us 4 days up. That's a good one there. That gives us a period of time up, which is nice. And you know, we found this rounded bottom, and this double bottom here, we just couldn't break below the low. And I was then looking for buy signals, green buy, right in here as well. Last few days, that was nicely profitable. Question is now, do we sort of break above this high? And it was the daily that really gave me the heads up. Look at the daily chart here on the CAD Swissy. Careful with this market. It's got a bit of a decent spread as well, not in a good way. So you don't want to be trading with wide spreads, especially if you're a day trader with the likes of CAD Swissy. I mean, if you're talking about with some of these spread betting companies, they've got a 4.5 point spread. It's got to move 4 or 5 points before it even gets into profit. So be careful. So I do like to look at longer, like maybe an hourly chart, daily chart, and try and run these for a day or so. But this lovely red sell signal, short all the way down. And that's a nice 400 point move. And then this here, you just see how mature this is. You know, I'm never going to be shorting at these lows. It's gone so far. And you know, nice little high, first test, and then retest of the double bottom, buy signal. But I'm looking back, I'm sitting back on my chair and going, look at that. I don't know why there was no yellow line there. Oh, I know why, because it didn't actually break the low here. Once it broke that low, that storyteller's high, the yellow line would have kicked in. That would have measured then the two-wave divergence. But that was a good trade from the start of this week. In fact, it was a trade that I actually really did miss. I think I might have got a very small portion of it. There's a video on YouTube where it was my worst trading day, and I think I did all the prep and then ended up missing most of that move. But hey ho, moved on since then and doing well on other trades as well. But yeah, you can do all the analysis under the sun, and then if you're not there to actually catch it, then that is a problem, guys. All right. And I should put in orders in the book. Okay, so it's an interesting day. Looking at the other screens, Nasdaq market selling off. Yeah, selling off hard. So look how fast it's going. Okay, but what's the storyteller saying? Storyteller saying it's quite extended and mature, isn't it? I use the word mature as in, you know, that's gone over 8 histograms. So I wouldn't want to short it here. My short would have been up here or somewhere in. We've got other systems to get in when you miss the signal. Blues and yellows. But there's no way I would want to short it here. And you know, yes, it could drop another 100 points. And I miss the move if I'm not already in it. But my personality, so we'll talk about personality types and type of trader you are on a video, because I think it is the most important thing. I can talk about technicals to the cows come home here, which is something I really enjoy. But if you really want to do well with trading, look at your profiling, your personality profiling, because we certainly do that here at Trading College with our mentorship students, because you need to know what type of personality you are. If you've never done a profile, then please do it, because the first thing to know is you just need to be aware of your style, your personality. And if you ignore that, then it's going to end badly. Knowing what your strengths are when you're as your personality profiling when you're trading the markets is crucial. We've got all reports on that for each type of personality. All right, so you don't want to be chasing this market down here, because at some point it's going to bounce back up here, and if your stop's about 20 points, then you're going to get stopped out. So you need to be patient if I was sitting here, I would certainly be doing my utmost best to be putting the kettle on or making a coffee, an espresso or something, because I don't want to get sucked into short me here. No. I'm going to go make a coffee. That's what and then wait for it to reverse back up, because this is extended right down here. Okay, let's wait and see. Yeah, the S&P's trying to drop as well. With that dollar move, we could start seeing the stock markets really coming under pressure today. We'll see how we end up. All right, so come back, give the video a thumbs up if that's what you do, and on the next video we'll get into personality profiling for students, and what we look for and different types, but I also want to give you a heads up on something called the VIX, the volatility index, because it's something that really does help me with my trading and our students, because the volatility index often leads, and what it does, it tells you when the volatility is going to pick up in the stock indexes. All right, so I will talk about that another time. It's really simple to use. It's really simple to understand. You just need to know what I'm looking for in it, so I can then jump into some of these stock market shorts, because when the volatility picks up, it tends to be on the short side where the volatility picks up, and when the VIX is pushing up or starts to push up, the volatility increases, which often leads to a bit of a stock market drop. Not always. Volatility can pick up and the stock market can go higher, but most of the time volatility pushes stock markets down. And I use patterns and chart patterns to recognize when that could happen. We'll talk about the VIX on another video. All right, so some of the things I'm looking for there, guys, keeping your trading simple, and there's some technical analysis for you. Have a great day, and give us a thumbs up, register or subscribe to the channel, because it will let you know when these training videos come out. Have a great rest of the day. Bye bye now.